This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 2nd, 2016. Euro dollar. So the euro continues to rally with the market breaking to another 2016 high and approaching critical resistance in the form of the October 2015 high at 114.95 further up. But as you can see looking back at the chart, there's a lot of solid medium-term resistance up towards 115, and the market may have a hard time establishing above the 115 level. At the same time, if we do see a break above 114.95, that October 2015 high, and a daily close above that level, it could open the door for a more significant test of 117.09 further up, which represents the August 2015 peak. But again, while the market holds below 114.95 on a close basis, we could see another topside failure in favor of a fresh downside extension in the euro. A break back above recent support, which comes in at 112.17, would be required to put the pressure back on the downside. Sterling dollar. So cable has rallied up impressively in recent trade, though the market is stalling out by some critical medium-term resistance around the 146.70 area. At this point, we would need to see a break and close above 146.70 to suggest that the market could be putting in a more meaningful base off those recent 7-year lows, while inability to do so will suggest that the market is looking to top out yet again in favor of another downside extension. Dollar yen. So dollar yen continues with its collapse, with the market breaking down to fresh multi-month lows and now approaching critical psychological barriers at 105 further down. At this point, the pressure remains on the downside, and it would take a break back above recent resistance at 111.89 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well supported on dips, with the market trading within a broader consolidation overall, though a constructive consolidation that eventually favors a break back above recent highs at 110.24 and towards the multi-month highs at 112 further up. At this point, setbacks should continue to be very well supported towards 108, with only a break back below the figure to compromise the bullish outlook for Euro Swiss. Aussie dollar. So Aussie is finally showing some signs of exhaustion after putting in some recent 2016 highs at 78.35, though the market would need to establish back below 74.77 to strengthen the bearish outlook and accelerate declines. Until then, there is still risk for additional upside, with a break back above 78.35 to expose critical psychological barriers at 80 further up. Dollar CAD. So dollar CAD continues with its impressive declines off the January peak, with the market now trading down to 125, critical psychological barriers. This is a fresh 2016 low. However, at the same time, daily studies are looking a little bit extended at this point, and so additional setbacks could be limited in favor of what should be some form of a corrective bounce. But ultimately, the market would need to establish back above 29.90, that high that we saw on the 18th of April, to take the immediate pressure off the downside. Kiwi dollar. So Kiwi continues to trade at elevated levels around the 70 area, though the market has struggled on a medium-term basis to establish above that 70 psychological barrier. We did see a 2016 high at 70.54 the other week, though the market would need to establish back above this level to suggest that we are seeing a more significant structural shift in Kiwi in favor of fresh upside. Inability to establish back above that recent 70.54 peak would suggest that the market is poised for another topside failure ahead of the next downside extension. A break back below 67.59 would, however, be required to take the pressure off the top side and strengthen the bearish outlook. SPX 500. So the S&P 500 is once again showing signs of stalling out above 2100, with the market rolling over last week. But we will need to see a break back below 2021, that support going back to the 24th of March, to really strengthen the bearish outlook and accelerate declines, exposing a retest of that 2016 low from February back at 1808. Gold. So gold continues with its impressive surge following that break several weeks back above some previous resistance, now turned support in the 1190 area. At this point, the market now is expected to test and break the 2015 peak at 1307 further up, with a move above to then expose a fresh upside towards the 1400 area. At this point, setbacks should be very well supported, with only a break back below 1190 to compromise the constructive outlook for the gold market.